Hello, everyone. Welcome to Switch Markets Live. I'm Shane Vernier, and today we're going to cover the 9 EMA strategy. Now, this is one of those strategies that is one of our more popular over on the How to Trade Com YouTube channel. We've got hundreds of thousands of views, folks that really like this strategy. I'm going to show you how to trade the 9 EMA. I'm going to show you how to get it all set up on your platform so you're ready to rock and roll. Trading this strategy on really any time frame, on any asset class, and really do anything you want with it. These strategies are designed to be sort of a way to kick off a trader's imagination. I always say that the number one thing that you have as a trader, the number one asset that you have is your imagination. And a trader's imagination is as important as the money that you have in the bank. Your ability to think, your ability to reason, your ability to adjust to changing market conditions, managing risk on the fly, managing your strategies on the fly, that's your number one. That is your number one asset. And it's one thing that retail traders have over the institutional traders. Now, sure, they have all the money, and they've got those algos and the dark pools, liquidity, and all that stuff. I could go on all day about the advantages that the big money folks have over us in the market. But one advantage we have is our creativity and our ingenuity. So the idea behind the 9 EMA strategy is for me to put it out there for you and take a look at it and say, well, I don't really agree with the way Shane's trading it. Maybe this will work better. Maybe on this time frame or this market, I can get better returns. So I think that these workshops or these live webinars are really great for that. And they're also great for interaction. You guys, if you're out there watching, I see there's quite a few of you watching right now. Be sure to ask questions. And just right there in the YouTube live chat on Switch Markets, go ahead and ask questions. Our friends from over at How to Trade, our friends from over there are joining us on this webinar. So it is exclusive to the folks at How to Trade and Switch Markets. This is not being beamed out all over the internet. It's not on X. It's not on our other YouTube channels. It's right here on Switch Markets TV. And then it's also in our live trading room there at How to Trade Com. So I see a lot of familiar faces over here. Tuku, good to see you. Bobby Bob, good to see you. Bobby, hello. Do you think the dollar is gaining strength, or should we just wait for tomorrow's NFP outcome? I think it's a very difficult day to trade. I really do. I think there's a lot going on right now in the markets and sort of the idea behind the big Fed meeting. And then we're going to come right in 2 days later with some action on NFP Live. So remember, if you want to see NFP Live, go ahead, check it out tomorrow. We're going to be sure to cover that live for you 10 minutes before the event. So at about 8:20 a.m. Eastern, I'm going to be all over it. So be sure to join us, everybody at Switch. Come on in, and everybody at How to Trade, come on back, and we're going to blow that one all over YouTube, all over X, and pretty much everywhere. You're going to be able to see my smiling face bright and early here in Dillon, Montana. That's one of those days I'm up at 4 a.m. ready to roll, and I'm really looking forward to it. I love NFP. You guys ask any questions that you want today. I will answer all of them. We are going to go through the strategy here in about 2 minutes. I do want to show you a few different things, though, and some of this stuff is going to be routine for many of you. For some of you, maybe not so much. We're going to talk about one news story, and then I'm going to show you exactly where to find these briefs, and always understand when the webinars are and when our live streams are, especially if you're a Switch Markets client. So as you can see, we've got our MT5 platform right here. Our mail, you've got mail. You guys probably get those briefs all day long. Well, right here, you can see there's a bit of a typo. This isn't going to be the 920 EMA. We're doing a 9 EMA with confirmation. But you can see sort of right above my head, you get these mail blasts, and they really show you exactly when we're going to be out, when we're going to be looking at our live webinar. Be sure that you're always being updated here. So that's definitely one that I wanted to cover. And also, we've got our upcoming trading schedule. We've also got all sorts of different briefs here in your MT5. So as you can see, my picture's sort of choking out the descriptions, but this is underneath your mail situation there, or your mail, platform in your MT5 platform if you're a Switch Markets trader. So we're trying to send those out, and make sure that you're always in the loop. All right, guys, let's go ahead and do a quick news story, and then what we're going to do is a trade update, and then we're going to go ahead and fire away with the 9 EMA. Let me see. Thank you. Thank you. Ready to roll with you smiling. Absolutely. No, I feel pretty good. Bobby Bob. Absolutely. Absolutely right. Good luck. Hello, Patrick. Good to see you. Tina Jing, I lost so much on oil long trade today. I'm sorry to hear that, Tina. We're going to go over maybe a strategy that can help a little bit. Oil, we talked about that. Actually, I put that out on X yesterday. I said, be very careful with crude oil. We know a correction's coming, and boy, has it. Really falling price action. Now we're beneath $70. Maybe I'll cover some U.S. oil towards the end with my own approach. Patrick, good to see you. Zahira, good to see you. Hi, how are you doing? Tina, always a pleasure. Sorry about the loss today. The beauty of it is, though, we do have NFP tomorrow, and as long as you stuck to your risk management, you're going to be in good shape. All right, guys, this is the news story that we want to hit right here. This one right here. Markets see a dwindling odds of a September interest rate cut from the Fed. This is something over at our How to Trade community and our live streams that we've talked about a lot, and I've really been an outspoken critic of the belief that you're going to get an automatic interest rate cut in September. I don't think so. It was a massive GDP number yesterday. All of a sudden, everything hinges on tomorrow's NFP report. And I'm not just being a hype guy or a pro wrestling announcer. I'm really not. Tomorrow's NFP is going to be really the litmus test. It's going to be really the acid test for what's happening to your economy. Now, if the labor's way down and we're taking a major hit in the labor market, then there's going to be pressure to cut interest rates. But if that jobs number comes in, good. And then we go into CPI next week. I believe it's next week. Then we go into that inflation report, and that inflation report shows maybe flat inflation. You're not going to get a rate cut in September. So we covered it yesterday on FOMC Live. We went through everything. I'm telling you right now, as sure as I'm sitting right here, grinning ear to ear, I'm telling you for a fact, this right here, now there's a 61% chance that you don't get any interest rate cut at all. That is huge. That's why the U.S. dollar's on the rally. We had a great question. Can the dollar keep going up and up? If they don't cut interest rates in September, maybe they don't cut them this year. The rest of the world's already cut. The U.S. dollar will gain puff. Right now I'm looking at the DXY, and it's right around 99.99. So that's huge. You're going back up over 100 in the dollar index, and that is all based on this stuff right here. So when we go out to price action, I want to cover my trade idea from yesterday. This is one of those that, it isn't exactly the best trade in the world. It's not panning out real great, but you can see that we had a pretty darn good area there. We're shooting for about 65 pips, something like that. We almost got stopped out, no question about it. Price went right to 81.51. That's why I always say make sure that your stop losses are sort of above those half handles, those quarter handles. You don't put your stop loss at 81.51. That's called being a pork chop. Remember that speech? Don't be a pork chop. Don't be a pork chop. You don't want to be somewhere where your stops are going to get run and then the market's going to reverse. That's exactly what's happened here, at least in the short term here today. This trade is on live support. The dollar is trending. There's no question about it. Now it'll take an NFP report or something really to shake the dollar and bring it back down to earth a little bit over the last couple of days. Last 48 hours have been big for the dollar. You're going to need to see that in order for this trade to win, but it's still alive. And I have to say, I take a lot of pride in my stop loss locations. That was one of those that I feel pretty good about, guys. You can see right there was your massive run up, and you're up there in the 50s. Right there, you sort of topped out after Jay Powell was done speaking. Big time rally right there during our FOMC Live yesterday. And now we're just sort of mucking sideways. I think we have a chance potentially to trade back beneath that 81 level. And so I'm watching the Swissy closely. I really am. I could definitely see a scenario where we sell off this stop loss right up here. We hit it pretty good on the stop loss. We're still alive, and since that big epic run up, we're only we're only in the hole, but like 25 pips. Still got a chance on this one, so I'm interested. I'm always happy to see that. That's for sure. All right, guys. So this is the 9 EMA workshop. I want everybody to ask questions. Be sure to do that. You're going to have to just flag me down in the live chat in the YouTube channel, or in the How to Trade trading room. I'm monitoring a couple live chats, so you're going to have to be a little bit patient. But I'm going to be sure to get to everything. So let's have a sip of coffee, and let's just get this thing rolling. All right, here we go. 9 EMA trading strategy. You can find this complete video over on the How to Trade Com YouTube channel. Be sure to check it out. It's not very long. It's just in-depth, and it'll give you a good idea what's going on. Now, welcome to the Switch Markets community, guys. This is the community. We're building it. We're going to have some new looks coming at you. My streams are going to look a lot different probably in the coming weeks. But what we're trying to do is we're trying to meld the educational component of how to trade with the live action, the trading, and the market access of Switch Markets. And we think that by melding those two communities, we can really build something strong. I've already interacted with many of you traders. Be sure that you go over to How to Trade. Ask me any question you want. I've had traders come over and they're just asking me consistent questions, and I'm more than happy to answer. And if I don't have an answer, I'll try to find you one. And if I can't find you one, I'll point you in a direction where you might be able to find one for yourself. But I love hearing from traders. I love hearing from live action traders, folks that are in the game and that want to trade. That's what I like. I enjoy it. I've been talking with you guys for 4 years now, and you can see I still enjoy it. All right, guys. 9 EMA workshop. Here we go. All right, today's schedule. Here's what we're going to do. I'm going to help you set up the 9 EMA strategy, and we're going to do it on TradingView, and we're going to do it on your MT5 platform. I want to work with MT5 a little bit more because I know most of you on Switch are trading with that. Remember, you can always meld the TradingView with your MT5 using that Pine Connector feature, which is free for everybody at Switch that's got a $50 account balance or greater. And we made that video out on this channel earlier this week. Shows you exactly how to run through and just go for it with Pine Connector. So to be sure to check that instructional video out. We took a lot of pride in it. That took me a long time to do because there's so much information in there, absolutely jam-packed. We've also got some great blogs, some great blog entries here on Switch Market. So check those out. Here's what we're going to do today. I'm going to set up the 9 EMA. We're going to go through some trade executions live. We got to find something that's moving. It's a little bit challenging right now. Dog days of summer. We're not getting those big breaks, but what we will do is we'll probably end up pulling, I usually pull a NASDAQ futures chart up and we'll trade it on like a 15-second or something just to show you guys exactly how it works, unless we're fortunate enough to get maybe a legitimate trade on a 1-minute or a 5-minute chart. A lot of times that's hard in the midstream to find. We're going to execute some trades, and then maybe we're going to get onto the Fibonacci entries. I'm going to show you how I use Fibonacci numbers to improve your entries. That's only if we have time, though. That's a more advanced topic, maybe one for another time, another webinar. Okay, so this is the 9 EMA. That's what the thumbnail looks like on our YouTube channel. Let's go ahead and get started. I love easy, guys. I absolutely love easy. And it doesn't get much easier than the relative strength index. And when we go to small time frames, short time frames, we're going to add the relative strength index a little bit later on in the live stream to really show you what a filter looks like. Those of you that have watched my live streams, we've added it a lot. We use it as a confirming device because momentum oscillators are fantastic, absolutely fantastic to establish confirmation. Good to see everybody back. Dave F19, good to see you. Andrea, always a pleasure, Andrea. I'm confident the trading's going well. We'll see exactly what we can get cooking here with this 9 EMA. If you guys have any questions at all, be sure to ask. All right, guys, let's get it started. The first thing that we're going to do is I'm going to help you get set up and ready to roll here on TradingView. Now, if you're not using TradingView, don't worry. Just sit tight. We're going to go ahead and add these to MT5 here in just a second. Very easy. I love simple. Keep things simple. That's it. When we trade, we're confident because we understand exactly what we're doing. Why? Because our strategies are intuitive. They're simple. They're simple for us to grasp. All right, let's do it. Indicators, you go up to the indicators, little toggle that on TradingView, and what you're going to do is you're going to cursor down to moving average, and you're going to go ahead and click on exponential. We want the exponential moving average. All right, go ahead and give that a click, and what you're going to have pop up on your screen is your 9 EMA. What you're going to do here is you're going to go over to settings, and I'm going to show you exactly what you've got. You've got your 9, which is sort of the default setting for TradingView. We want it based on the close of the price bar. Now, the way that I trade EMAs is a little bit different than this, but for the sake of this webinar, let's keep it simple. We're going to keep it on close. Don't worry about smoothing. We're not going to talk about smoothing. We're not going to talk about offsets or anything like that. We're just running with the base 9 EMA. There's a lot of traders out there that are going to talk about smoothing, and they're going to talk about your offset and how those have to be dialed in a certain way. I highly recommend not worrying about that minutia just yet. There may become a time where I get into smoothing and talk about how that can actually streamline the 9 EMA even more than it already is. But right now, we're going to rely on the indicator and our periodicity to keep us current and keep us active. We're going to stick with the 9 EMA. Now, personally, I'm partial to short-term time frames. I love red. Red's my favorite. It helps me really get, I hate to say aggressive, but it really, it's better than like a passive, sort of a passive purple or a beige or something. You guys definitely can color that thing any way you want. I'm going to go with red. So this is nice. You can see right here, just based on the 9 EMA. Now, we've got the 9 EMA on our chart. I'm going to run through the rules in just a second. Let's go ahead and set this up right here on Switch Markets now. So we're going to go to Insert. This is a little more involved. So go up to the top of your MT5. You're going to click Insert. You're going to go to Indicators, and you're going to go down to Trend. Why Trend? Because the moving average is a trend indicator. You're going to cursor down to moving average, give it a click, and you can see right here, okay, we're going to have to adjust the periodicity to 9. So right there, we're going to go to 9. Our method is exponential, and we're going to apply to the close of the bar. Now, if you want to use blue, red, whatever, I'm going to go ahead and stick with red. That's what I like my short time frames to really, my short EMAs to really reflect. And we're going to go ahead and pick a sort of a thick type of a line so we can all see it. You can use a thick line, thin line, whatever. Don't worry about the shift. Don't worry about any of this stuff. It's that easy. Okay, we've got our 9 EMA dialed up. All right, let's go over some rules. I'm going to work with TradingView right now. You can see right here, this is a US dollar, Japanese yen. Let's head on back over to our TradingView platform. Now, the basic rules of the 9 EMA strategy are very simple. They're very simple. When a bar closes beneath the 9 EMA, you sell. When a bar closes above the 9 EMA, you buy. Now, the first question that I will inevitably get, I get it every time, definitely on our, we were setting up some orb trades here yesterday. Number one thing anybody always asks me, Shane, what kind of time frames are you looking at? All right, listen up. If we're going for, say, a U.S. index, a U.S. indice, U.S. 30, U.S. 500, U.S. 100, even the Russell, even the Russell 2000. When we're using those, I highly recommend maybe 15 and 30-minute charts during the U.S. session. So let's go down to a 15-minute chart. I know a lot of you really love the 15-minute. The 15-minute orb is sort of what we've been looking at. I like the 15-minute. I don't have a problem with it. So if we were going to trade this during the U.S. session, U.S. 30 market, I recommend the 15 and the 30-minute chart. We can even go down to a 5-minute chart, a 1-minute chart. Now, we're going to get to those, and I'm going to show you why you need confirmation. But for right now, just a straight-up 9 EMA with no RSI, no confirmation. 30-minute chart during the U.S. session for the U.S. 30. That gives us a good, deep market to attack. And when I say deep, I mean you've got a lot of traders involved. Take a look at our volumes. Listen, guys, you don't want to be trading these assets when the volumes are extremely low. You want to target these things when the volumes are high. When you're sort of seeing, okay, this is the most active time of day to be trading it. That's when you need to be trading something like the U.S. 30, U.S. session, okay? 30-minute chart or 15-minute chart. Now, let's go over the rules of this 9 EMA relatively quickly. Let's go right here. Opening bell, ding, ding. We've already chosen our time frame. We're going to go 15-minute chart. We've chosen when we're going to trade it during the U.S. session. Now we have to get our entry or exit rules. Right there would be your opening bell. That's your first bar. There's no trade there. Why? Because we're letting this thing set up. You can see where our 9 EMA is. Now, what do we want to do? Very simple. You want to buy when the market goes, when you get a price bar close above the 9 EMA, and you want to sell when you're beneath it. So let's take a look at this first trade. There's the first 15 minutes of the session. There's the second 15 minutes. You would have had a buy signal right here. So where would you have entered that thing? Right there on the bar close. This is just a basic EMA, 9 EMA. You're going to enter right there, okay? Where's your stop loss? You have two options with your stop loss. Personally, I put it beneath that swing low. That's exactly what I would be looking to do here. So there's your trade. There's your buy. There's your stop loss. Where would your profit target be? You have options. You always have options. Number one, you can go with a flat risk versus reward. Something like this, let's see, 44,590, stop loss down there at 44,420, so what's that, about 168 points, 166 points, something like that. You're going to be doing, I don't know, it's going to be right up in here somewhere, 166 plus 590. It's going to be what, 750, something like that? Okay, that would be just a static one-to-one. That's a trade that I like. I like one-to-one trades. That's sort of my personality. Now, this trade's a loser. You bought right there. You got stopped out. Now, another way that you could potentially trade it is just to exit the trade once price falls and closes back beneath your 9 EMA. I may make a video on that. That's more of a dynamic approach to trading the 9 EMA. For me, I like static. I like simple. So my stop loss is going to be beneath that swing low. Now, is this the best time of day to be trading a 15-minute chart? It's active, a lot of volume, so that's good. But did we get a break? No, we didn't. Okay, so let's try to go ahead and filter these things. Short time frames, 15, 30. Do you need to use it on a 30-minute chart? Maybe. 15-minute though, 5-minute, 1 minute? Yes, you need to be thinking about confirmation. So let's go ahead and add our confirmation indicator. That's going to be our relative strength index, RSI. And then what you're going to do is you're going to cursor down here on TradingView. You're going to go right there to relative strength index. You're going to give it a click, and you're going to leave it exactly the way it is. Let's go to the settings, and what do you have here? Inputs. RSI length is 14. You're going to leave that the same. That's the default setting. Source, close, okay? Same. We're not worried about smoothing. We're not worried about anything. We want it in a window. I want it in a separate window. That way I can go ahead and read this oscillator as potentially being something that's going to show me when the market's overbought or oversold. So when I'm working with RSI, it's very simple. Anything above 70 is overbought. I want to sell the market. Anything that's underneath 30, it's oversold. I want to buy the market. I'm going to sell the market potentially when you get a bar close underneath the 9 EMA, and I'm going to buy the market when I get a bar close above the 9 EMA. So in this instance, if we were using confirmation, let's go ahead and wipe all this out. If we're using confirmation, we've got a situation down here where price is beneath the 30. It's oversold. All right? What do I want to get long, right there. Oversold, I'm looking to buy. Where's my buy signal? Bang, right there, right up above your 9 EMA. Interesting. What would my trade look like? Spike low. There's your entry right on the bar close. Now price is moving against us. Is what it is. There's your trade. Where's your profit target and your stop loss? You can go with the static risk versus reward. I know there's a lot of smart money concept traders and there are folks that really love the ICT concepts. You can shoot for the top of market structure. I really don't have a problem with it. The biggest thing that you have to remember, whether you're shooting for a 1 to 2, 1 to 3, 1 to 4, or using market structure for your profit targets, the further you have to go to hit those profit targets, the smaller your success rate's going to be. That's the way it is. That's the way it is with pretty much every strategy. So I like 1-to-1s just because anything over 50% is going to make me a winner, and I like to win, and I can easily quantify my edge. It's a little bit more difficult when you start talking about 1-to-2s and 1-to-3s. You don't have to hit them as often, but you definitely still have to hit them to be profitable. So that's a good look at adding RSI. Let's go ahead and add RSI on our MT5 platform. So we've got, what do we got here? We got our dollar yen. Okay, dollar yen daily chart. Okay, let's add RSI and see what's going on. Do you need RSI on a daily chart? No. And I'm going to give you the 2 best time frames that I look at. Now, 3 best time frames that I look at for Forex pairs here. Just a second. So let's go ahead and add the RSI. What are we going to do? We're going to go up to insert. We're going to go to indicators. We're going to go to oscillators. Remember, the relative strength index, invented by Wells Wilder Jr. back in the late 70s, early 80s. I'm not really sure, to be honest with you. We have videos in the Trading Academy at How to Trade. If you want to learn more, go check it out. I believe there's a 20-minute video in there on RSI that I made a while back. Oscillators. What do we want? Relative strength index. Give it a click. What do you have? Period is 14. Apply to the close. Default settings. Don't get in there. Don't start changing it. You can change it later after you understand a little bit about how it works. For me, let's keep it on the default. And there you go. You just hit OK, and you can see our RSI. Now, the beauty of this, I actually like this representation on MT5 better than the trading view because it's not as hard. You can see right here, what do we have going? 70 and 30. That's our envelope. Above 70 is what? It's overbought. We're looking to sell. Below 30 is what? It's oversold. We're looking to buy. So right here, we're creeping on that 70 level. We're almost in overbought territory here on the daily. Now, I love my dailies. I love my daily charts. You could use a strategy like this on stocks and do pretty well. You really could. You're going to get in on big moves. You're going to be able to take positions on a daily without having to worry about the derivatives, the leverage, and that's fantastic. But is it reasonable for us to be trading a dollar yen and taking positions on a daily chart? Typically, it's going to be very difficult. And the reason why it's going to be difficult is because the risk versus reward, you're going to have to get in on big trends, number one. Number two, your stop loss locations are going to be significant. So let's say we were just going to buy this willy-nilly right here on this crossover. Your stop loss is going to be beneath the previous day's low or 2 days, maybe the weekly low. It's a great trade location, and it's worked like a charm. But is it really viable? Man, that's going to be a big risk. A big risk. There's a long ways to go to your stop loss. That costs money. So if I was going to be trading Forex pairs, and listen up, I know a lot of you are, I would begin with the 4-hour chart. 4-hour chart is fantastic for Forex. Why is it good for Forex? Because the Forex is a 24-hour market. We trade it around the clock, all around the world, and that essentially is what we're trying to do, is balance the value of money against foreign currencies. So if you've got the U.S. dollar, that thing's being traded all day and all night. It's being traded against the yen, the franc, anything, the ruble. They're trading these things all around the clock. In my opinion, your 4-hour chart gives you a fantastic opportunity to trade entire trading days. Make your decision on a trading day's range broken into 6 parts, 6 price bars. I love that. That's simple. That gives me a good idea of A, what the market's doing. B, it's going to potentially make my stop losses and profit targets maybe a little bit cheaper. So when I'm looking at something like this, I've got the dollar yen lined up ready to go on a 4-hour chart. There's my 9 EMA. Right here, what do we got? We are in overbought territory here. It's above 70. That means I'm looking to sell this market. I want to sell it. What do I have to sell it? I've got to get a 4-hour bar close beneath this 9 EMA. If I get that, then we're rocking and rolling and we're ready to trade. All right, that's pretty much the concept behind confirmation. In my opinion, on a 4-hour chart, do you need confirmation? I would have it up and be looking at it. I don't necessarily know that you need it. What I will say is if you got the RSI down here, it's not in overbought territory, look what happened to you right here. You sold. Stop loss is right up here, so it's not the biggest trade in the world. I mean, you didn't lose the ranch or the house, the cars, or your husband or your wife or your significant other. You didn't lose everything. I mean, you got stopped out, but you did lose. Why do you think that trade right there had a less of a chance to be successful? Because the market flattened out. I got a great question earlier today. Shane, what's a rotational market? When you talk about rotational markets, what does that mean? A rotational market is a market that's not making a directional move. It's trading from left to right in the trajectory of price actions flat. Typically, you see smaller price bars, and your 9 EMA is going to be flat as well. Beware of rotational markets, especially when you're trading the 9 EMA. It can get you. Now, back to price action. When should I be thinking about confirmation being a must? Shorter time frames. Let's take this down to a 30. Okay. We're deep into overbought territory right now on the dollar yen. 30-minute chart, and we've got a chance here potentially to take this sell. Should I be trading the 30-minute chart on something like the dollar yen 24 hours a day? I would say no. I would be looking to be regional. Be regional. Be smart with the instrument you're trading. Be smart with it. If I'm trading yen, when am I going to trade that? Am I trading the dollar yen? When should I be trading that? Probably U.S. session. That pretty much goes without saying. London, U.S. overlap? Absolutely. That's probably prime time. But when else? Maybe after the Tokyo Open. Maybe during that Asia-Pacific session, we could trade something like the 30-minute. Where traders run into trouble is they always want to do this. And listen, I was one of them. I traded a 1-minute chart forever until I finally said, I am sick of doing this. This right here looks great, doesn't it? Nice big moves. There's nothing wrong with the 1-minute chart. We're going to trade some short time frames right now using confirmation. The only thing I say is if you're going to go to a 1-minute chart or a 15-second or a 30-second or whatever you want to do on a Forex pair, you need to make sure that the market's moving, number one, that you're in a period of very, very good market depth and volatility, maybe right after a key news event, not during, but maybe right after when there's a lot of players in there. You can do that. You could also be looking to trade around the U.S. Open, maybe during the London Open. You could trade pounds during the London Open, somewhere around the 1-minute chart. I don't have a problem with it because your risks are going to be low. But what you cannot do is you cannot trade a 1-minute chart without confirmation during a flat period or you will lose. I guarantee it. This stuff right here, this is just sort of a, pardon the turn of phrase, but I mean, that's just the murderer's row right there. When this market flattens out, it's almost impossible. It's almost impossible to trade something like the 9 EMA. I mean, you're constantly just getting chopped to death. So we have to give ourselves a chance to succeed. All right. Let's go ahead and get to it and see if we can make a few trades. I am way behind on the live chat, guys. I'm sorry. I'm going to go ahead and get caught up right now. Sometimes I get off on a tangent. Look at this. Look at this break right here. 15-minute US 30 right there. That would have been your bid. You're going to lose. Market's coming off. It's heavy. We may be in for maybe a late day buy on that, though, especially if the RSI gets beneath where we need it to get, which is 30. Let's go ahead and take a look. We'll have to look at some oil here. As far as questions go, if you have any questions at all, fire them away over at How to Trade in the live chat there or on YouTube. I'll answer anything. As far as what could we be trading right now that's going to give us a shot? It's going to give us a shot to trade. One of the things that I always do for instruction, I typically go to the NASDAQ futures, EMA NASDAQ, and I get into something like I go real short time frames just so we can illustrate how a trade looks. So right here on a 1-minute time frame, you can see exactly what's happening with the EMA NASDAQ. We're starting to see things start to break to the bear. It looks like we probably had a pretty good orb trade earlier today. We can maybe line up one of those for after NFP tomorrow. But what do we have? We've got a market in a free fall. So the first thing I'm looking at here is my RSI. It says, okay, is my RSI telling me to buy or sell? It's telling me to buy it. Now the low down there, our RSI value is right around 12, 13. We are deep into oversold territory. Now, one of the questions that I always get, and I go, Shane, why, if you're going to trade, use the RSI to trade, why don't you just trade with the RSI? Because the 9 EMA gets us into the market with confidence. RSI can be very tricky. Momentum oscillators are tricky. Sure, it's telling you it's oversold, but can you really buy into this market? There's not really a compelling reason to buy into it unless we've got a macro level or something compelling to get us in. The thing that's going to compel me I call it, sort of taking the safety off. It's my trigger. What's going to trigger me to get me in the market? And that's going to be a bullish close up over the 9 EMA. So I don't think we're lucky enough to get it this minute. But what we're looking for right here out of this NASDAQ is you're going to want to go ahead and you're going to want to see about getting a bullish close above the 9 EMA. So we've got about 15 seconds left in this price bar. I don't particularly believe that we're going to get it. You can see the pricing DOM here. This is a very, very active market. Anybody that's traded the E-mini NASDAQ, you definitely go for a ride. The volatility in this market's really unparalleled. The way that it moves is you can see just how fast each one of these blocks right here is about $6.25, something like that. This could be a fantastic trade for us though. 1 minute chart. I really like it. So what are we're going to get ready to go. We're going to go buy. We're going to buy market. As soon as we get our close up above the 9 EMA, I'm going to send them. And then right there, we've got 4 units, which is going to be about 4 contracts. So let's go ahead and just wait. I'm going to get a lot of questions. Shane, what is a contract? A futures contract, all that is your position size. So let's say if you're trading Euro USD, it would just be like your lot size. You'd be trading 4 lots instead of 1 lot. This is a full-sized E-mini NASDAQ contract, so you're looking at about $6. I believe it's $6.25 a tick, every tick. So to multiply that by 4, so what are we looking at? About what, $25 per tick. These trades, it sounds expensive, but if you're working for a prop firm or somebody's fronting you, a $50,000 account or something like that, especially in the prop atmosphere, you can do a lot with that. This is not big size, guys. This isn't big size. There's traders out there that trade 12s, 16s, and 20s. That's big size. All right, looks like we got an opportunity here. I mean, I would really love for this thing to break up. We're going to give it a couple minutes to see exactly how we can execute. I want to execute one of these trades for you live to really show you what's up, just to show you the functionality and really the ride that you go on when you attempt to make these 9 EMA trades. This is really good for me. I have a lot of confidence here. The market is not in a breakaway trend. Right now, the E-mini NASDAQ is off about negative 0.15%. In my opinion, that is not a trend day. Even though, believe me, 1 minute chart, this looks like the trend of the world. It's not. It's not. We've got to be smart about what we're talking about. Keep things in perspective. This is not a trend day. We're only off about 0.13%. This could very easily be an intermediate term bottom that's going to give us a shot to win the trade. Now, what do we have to have? We've got to have a bullish close up above the 9 EMA. I can't make the market go our way and do it. We have to have it work with us before we can actually make this trade. We're close, though. I can tell you right now, we're close. You can see the compression sort of setting up in this zone. We're either going to get compression, then break and follow the trend, which is what's happening. We're still in oversold territory. Right now, as I'm watching price action, I'm still thinking I want to buy the market, but I've got to have a reason to get into it. So we're starting to run. I mean, we could be here legitimately all day before we get this thing to base out. But this is the game, guys. If you want to trade like this on short time frames, always stay organized in your brain. Be organized up there. Don't be scatterbrained. Say, okay, I'm watching the NASDAQ. I'm in oversold territory. I'm looking for a 1 minute bar close above my 9 EMA. And then bang, we're going to send them. You're going to know almost instantly where your stop loss should be beneath that swing low, which is going to correspond with your oversold RSI. And then you're going to be able to put your profit target somewhere up in here according to what you're going to shoot for. For me, I'm going to shoot for a very conservative 1-to-1. With a bit of luck, we'll get filled. This looks like it's coming our way. You'll notice the 9 EMA is illustrating exactly what's happening in the market, which is a bearish trend, at least on the 1 minute chart. At least on the 1 minute chart. Let's give this one another minute or two, and then we'll execute the trade. But in all actuality, we can't sit here all afternoon. I'll take this down to a shorter time frame on a different market, and then we'll go ahead and just fire away. And see if we can execute a trade for you so you can see it. Let's see. Yeah, I mean, a lot of folks like this strategy. A lot of folks don't like it. I've got a lot of great positive feedback on YouTube. The video's our biggest one we've put out on that channel. A lot of positive feedback. A lot of folks really liked it. A lot of folks really hated it. If you have any comments, any questions, be sure to check out this video on Switch Markets, our Switch Markets YouTube, and you can go ahead and just leave a comment or a message or a question, and I'll get back to you. I answer them all. Maybe not right away, but I try to get back to you at least the same day. Depends, though. If it's over a weekend, then no. Okay, this market's starting to come our way now. You can see the trade is starting to set up for us here. I'm going to go ahead and just shut our tote board down to give us a little bit more room to work. But this is exactly what we're looking at, guys. We've got a 1 minute chart. Now, remember, it can't be close. If we close right on this 9 EMA, I'm not taking it. It's got to be over the 9 EMA. We've got to close right up in here somewhere. That's going to be our indicator. That's what's going to signal that this short-term trend is actually starting to change direction. That's key. If we don't get that, we can't do it. We cannot do that. So right now I'm watching closely. We're getting into it. How many more seconds do we got? 15, 16. I want that close. I want that close somewhere right up in here. I don't want it way up in here, but if it is, we'll take it. But still, we want to get that close right up in here. And we're right on the cusp. It's very, very close. 5, 4, 3, 2, 1. Okay, we're not there. We're going to have to wait at least another minute. I'm going to give it one more minute, and then we're going to have to go do something else to try to get a trade because I'm not sitting here all day. All right here, we should be in business potentially for a trade entry. Now, if in fact we do get that close, where's our stop loss going to be? And you can line these up ahead of time. There's where your stop loss needs to be. Don't put it right on it. You don't put it right on that swing low. Everybody can see the swing low. You've got to pad it by a few ticks. I'm going to go ahead and put it right down there. We're going to pad it, probably another couple of points or so. NASDAQ's volatile. We're going to have to give this thing a little bit of room to work. Now, what I want is I want to close right here. Where's our profit target potentially going to be? That's going to depend on where our close is, but it's going to be somewhere right up in here, and we'll dial that in potentially according to a 1-to-1. It just really depends on our entry. Okay, now, are we going to get that clean close I'm looking for? It's very close. It's very close, and if it's right on the line, we're not taking it. We're going to stay out of it. If it's right on the line, it looks to me like it's going to be an all systems go. 2, 1. Okay, we're going. Okay, we send them. We're going to go ahead and send them deep. There's our long. Okay, our long is dialed in. It's going against us. That's fine. I'm not too worried about it. Spike low, swing low right there, okay? That's our stop out point. That's what saves us if this thing reverses and blows up in our face. Where should my profit target be? I'm a 1-to-1 trader. I'm conservative like that. I want to win this trade. I try to win as many as I possibly can. That's where my edge comes in. Where should my profit target be? Let's do some quick math. 23,457 to 23,416. So what is that roughly? 41 points, something like that. So you're going to be right up here where? Probably right around 23.5. Right in this zone here. That's a base 1-to-1. Now, you don't have to stick to that. Now, you can see you're starting to see the dollars. The dollars are starting to ching, 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 ching. You're watching all that money, and you're saying, okay, should I take the money or not? This is a good break for us. This is a good move. I have no problem staying in this trade. Should I take the money now? I'm going to tell you right now, as a veteran futures trader, it is hard. We just put down a 4-lot trade, and we're already up $1,200. It is really hard not to take this money right now. Even for me, I've been doing this 15 years, since 2011, 14 years. It is hard to not jump in there and say, I want the money right now. $1,300 is a lot of money for a lot of us. I would take that in a minute. That's a pretty darn good day's work, not bad at all. Is that the right thing to do? If you're a systems trader, if you're a 9 EMA 1-minute systems trader, you almost have to stick in there. And I know it's hard, but you do have options right now. Number one option, you can move your stop loss to break even. And what that's going to do is that's going to insulate you from any risk. It'll be a risk-free trade. 95% of traders on the internet, people on YouTube, people similar to myself, are going to sit there and they're going to tell you to move to break even because that's going to insulate. It's a risk-free trade now. You're not risking anything. And they're not wrong. But what traders do wrong that make them get into good trades that are profitable and they make themselves a loser is when they're not consistent. If you're going to move your trade to break even, your stop loss to break even, you need to do it every single time. And then you need to record the results and take a look at what it does to your profitability. Now, right now, we were up. We were up pretty good, and now it's coming back against us. If my stop loss is at break even right now, I have the benefit of knowing I'm not going to lose any money on the trade. That's fantastic. But I may also get stopped out and then watch this thing go up and get my points. Remember, when you move to break even, yes, you're in a pretty good position. Right now, you'd feel pretty good. You'd say, well, if it goes up and gets it, great. If not, me, I don't think like that. I want the money right now. If I was going to move to break even, I would just take the money. But there's going to be a certain percentage of these trades that we're going to get in, and price is going to bang against us, and we're going to lose. I call those breakaway losers. And if you move your stop loss to break even, like right here, you get stopped out. If you move to break even, you're gonna miss out on all those ones that pull back and go up and win, and you're gonna take all the losers that break dead against you. That's how traders get into trouble. So if you're gonna move to break even, accept what it is and do it every time and be consistent. If you're not, then just ride these things out. And right now, I have no problems leaving this thing down. Remember, a good trade, 3 parts to a good trade: a good entry, a profit target, and a stop loss. You're also in a situation where your risk management needs to be dialed in. If you're trading a 1-minute chart or a 30-second chart or a 5-minute chart and you're doing this kind of business, you need to at least accept some really rigid risk management standards. If you're trading a 1-minute chart and you're doing this maybe through the U.S. trading day, you're going to be making a dozen trades, 20 trades, 30 trades. You could easily, on a 1-minute chart, you could easily make 20 trades a day. If you're doing that, I always say you can go up to 5%, and I'll look the other way. No, between 1 and 3% on any given trade. That's what you need to be looking at. Now, this trade right here, it's still looking pretty good. We're up about $1,400, 1280. I feel decent about it because you're seeing the market get compressed above our 9 EMA, and it looks like we may actually go up there and get our points. That would be great. I would love that. But right now, what we're faced with, and put yourself in this position, do the exercise. Mentally, put yourself in this position and say, okay, let's pretend that's not demo money. Let's pretend it's my real account. Try to feel what that is. There's an old saying, I believe it's Paul Tudor Jones said it. He said, the most difficult part of a trade is the last 25%. That's where we're at right now. We've got our stop loss. We've got our sweet entry. We nailed it. We're in the money right now. We're right up there. We're trending higher. It looks like we're going to get to our profit target. The temptation is very real to take the money off the table. If we do that, you got to be consistent. For me, I mean, for instructional purposes, we probably ought to just let this thing run, but it could take the rest of the day to really get a resolution. I like what's happening. I can tell you this. I mean, we are rotating we are sort of driving back up into this sell-off. It would not shock me. A lot of smart money traders would say, Shane, you should be aiming for that order block up there. I'd say, yeah, you can do it. You just took a position trade on a 1-minute chart, and you're looking to get a bigger move back up into that opening range. There's nothing wrong with that. It's not a trend day. You're not fighting a trend. It looks like a trend on the 1 minute, but it's not. So price is now breaking up towards our profit target. We're up about 1680, 1700. That's significant. I mean, that's a lot of money. Can you take it? Can you take the heat and stay in this market until you hit the profit target? That's something you're going to have to decide for yourself. That's for sure. All right, everybody. That's the 9 EMA crossover. Or no, excuse me, not the 9 EMA crossover. That's the 9 EMA with RSI confirmation. I really wanted to sort of get into this stuff and show you exactly what a trade is. I think that's more valuable than me just ranting on and on about rules. The rules are easy, guys. Check out the video. If you're going to trade on short, compressed time frames like the 1 minute or maybe even beneath, you need to be able to stick to your guns. Number one, strong risk management, and be consistent with your activity. You've got to do it. And as far as confirmation devices, feel free to use stochastics or MACD or anything you're really comfortable with. CCI, a lot of folks use CCI. I like RSI because it's real easy. All right, we're out of here. Let's go ahead and close that up. We did have one question on U.S. oil. I'm going to go ahead and do that right now. I'm going to sort of show you exactly what my thoughts are on U.S. oil. This right here, this is our Swissy trade. Interesting. We'll see if we get a move there. Here's a U.S. oil, sort of a challenge here. I don't look at the 4-hour. I'm looking at the 30-minute chart typically during the U.S. session and my macro levels. You can see really what's developing here, sort of a real ugly sort of downtrend that developed during the overnight right there. You sort of, you go right here, and you just sort of trending off. That's called the grind. So what do we have? We have the big run up there ahead of the Fed, right? Now we're just sort of creeping down. So are we bearish or bullish? I'm bearish. I put that out on X yesterday. I was sort of bearish towards WTI. I thought that the rug was going to get pulled, and it has been. But you're still, take a look at your levels, though. You're still up around $70 a level. Let's go to the daily. Fantastic pullback. Really great market structure right here. What do we get? Do we test 68.50? Low right there, 68.56, and then bounce. Big time support zone right there. I believe that once that 68.50 area, once that zone gets taken out, more than likely going to come tomorrow. But if in fact that's the case, then you'll see probably a big deeper sell-off. And I'd probably be a net buyer down there at 67. But as far as short-term price action goes, it's really going to be all about NFP. Why would crude oil come off today? Interest rate expectations. Remember, a hawkish dollar and a hawkish Fed, interest rates that are higher for longer. those typically are going to bring commodity prices down. So gold and crude oil, those are going to come down, whereas a dovish dollar is going to send commodities up, stocks up, everything up. Right now, the markets are in a bit of no man's land. We don't really know what's going to happen. We're not particularly certain what the Fed's going to do. I don't know, guys. It's going to be fairly interesting. All right, everybody, I want to thank you for joining me for this 9 EMA workshop. I hope you got something out of it. As far as our pet rock here, I call it the pet rock because nothing was happening. It looks like we're in pretty good shape to go up and get the price that we're looking for, right around 23,497. It would be surprising if we don't draw blood at 23.5, something like that. But pretty darn good little trade right there. It's an interesting strategy. It's a very popular one. People love it. So give it a, kick the tires and take it for a whirl. Take it for a spin. Remember that you can add anything you want to it. If you like the 9 EMA, you can go with it. If you don't like it, don't go with it. Pick another one. There's a million strategies out there. Your job should be to pick the one that makes the best sense to you. That's it. That's it. I mean, if you don't like the 9 EMA, don't trade it. If you don't like the 920, don't trade it. If you love the orb, trade the orb. It's all about being intuitive and being conflict-free when you trade. That's absolutely huge. That's for sure. Let's go ahead. We'll get right back to it just because it's going in our favor. See, we pulled the plug on it. We should have let it run. That looks like it's going to hit its profit target. Okay, everybody, I want to thank you for joining me one more time. If you have any questions at all, head on over to How to Trade. Be sure that you send me a private message. Switch Markets has a ton of stuff out right now, a ton of bonuses. Check out our Switch Markets channel on YouTube. You're watching it. Typically, a lot of you are watching it right now. We've got a bunch of shorts coming out. We've got videos. That Pine Connector video just dropped. There's going to be more and more content there. And like I said, if you have any questions at all for me, head on over to How to Trade. Send them to me in private, or you can leave them in public beneath this live stream once it's cataloged here in a few minutes. All right, everybody, that's a wrap. Have a fantastic trading day. Like I said, NFP live tomorrow. Be sure to join. That's an early morning for me, but it's a lot of fun. So we're going to go ahead and get in there and see if we can make a few bucks. We might trade the 9 EMA. We might do the 920. Tough to say. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.